All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. We have a sale on all month. Go check that out. It's in my pinned tweet on Twitter or X. Anyways, let's get into it here this week. So markets here, we talked about this on Monday. Wasn't really looking for a ton of upside this week, and we did finish fractionally higher. You can see we closed at 57.38 last week, so closed with about 13 points on the week, so not a huge gain for the markets, but overall we held up pretty well. And, you know, markets kind of just consolidating sideways here. I still don't see a ton of upside here in the near term. I do think we'll come in under a little bit of pressure here, but right now markets held up okay. I talked about the 57.20 level on Monday. That's equal to 570 on the SPY. And I said if bears break below that, they are in control. They did that on Tuesday. So we were looking for a sell on Tuesday. We got that pretty nicely. And bears held control for 3 days, and then that was it. So markets right back up here. A couple of headlines this week. So the port strike is now over with. So they agreed to a 62% wage hike over 6 years. And overall, kind of ending up, not really impacting markets all that much. The big mover this week, though, was jobs. And I predicted this on Monday. I predicted this, really all week, that there was pretty much no way that we were going to, we're 5 weeks away from the election. Okay, so we all know how these jobs numbers work, right? Especially the government ones. There's no way that they were going to come in with those estimates. So 125 was estimated, and I predicted over 200,000, and we got 254,000 added. So you can talk about how that number came to fruition, but essentially that just proves my point. They're not. This is an incumbent, right? They're not going to have a pedestrian jobs number. They smashed it out of the park. It'll probably get revised down, but I mean, this was going to happen, right? And I said, don't be long bonds here because we're going to have yields are probably going to spike. They did. Take a look at the 2-year here, up 22 basis points on Friday. That's the 2-year yield. Okay, 22 basis points. 30-year up 7, 10s up 12, 5s up 18. And traders now betting on 50 basis point cut. That's per JP Morgan. Or excuse me, 25 versus 50. So that was the big news. Will this number get revised down? Almost certainly. But we have 5 weeks to the election. Thinking that we were going to have a pedestrian or worse jobs number was kind of ludicrous, if you ask me. And markets did like that. So we had, if we look at the futures here, you can see market in the morning we had a big pop. We came back in, and then we ended up closing at the highs of the day. So again, markets liking the headline. That's typical. And we'll see how that plays out going into the rest of the month here. But overall, markets are holding up okay. Next level is 5,800 on SPX. Maybe 580 SPY. I could see that getting hit. That's a little bit higher. That's probably like 58.25 or so. But overall, I still don't see a ton of upside here in the near term, despite the bullish close this week. So we'll see. But the onus is on the bears to actually prove it. You got to break that 570, aka 57.20 area. And then, we got to take these lows out here on a closing basis. And then you can start working your way down. Again, markets defying seasonality. Typically, it's sell Rosh Hashanah by Yom Kippur. And right now, we got to sell exactly on Rosh Hashanah and no follow through. So we'll see if that plays out. That will go through next week. Who knows? Maybe we decline next week and maybe it plays out. But right now, markets are holding up and really, technically, no problems. I just personally see momentum kind of declining here into this October period here. But we'll see. Triple Qs here are, again, holding up. We got back above 486. Talked about that level Monday. We broke Tuesday, and then we closed back above it Friday. So that's remaining in a better shape here, but we still have the lower highs. The NASDAQ is still a laggard, mostly because of semiconductors. Russell 2000 had a decent day on Friday. This is still lagging, though, lower highs. Not a terrible pattern. We violated the wedge for 3 days, and we closed back above. So on the weekly, we pierced it, but we closed back outside, so no problems there. So Russell definitely a laggard. The Dow had a nice bid. We had a topping candle on last Friday. We talked about that, and that's still intact. That said, if we consolidate long enough, we can go higher. 425 is next psychological resistance on the DIA. Semiconductors here, again, up 1.3 on Friday. Again, well off the highs. So I'm just not in love with semis right now. That could change maybe as we get closer to year end. They've been consolidating. They've been doing some backing and filling, but they are still a laggard. And that is a big reason as to why tech has underperformed. However, sector I've been talking about for a long time here, IGV, new all-time weekly closing high. And that has been offsetting a lot of that semiconductor weakness. Take a look at the IGV here. Weekly all-time high. Very strong chart, nice consolidation pattern, and that is, essentially on the cusp of breakout here. So cloud remains strong, cybersecurity, those types of names, anything software. Dow Transports here, again, they did back off. Maybe some of that had to do with the strike, but, green day on Friday, and overall, big picture pattern is still fine. Higher lows equal highs. All right, let's flip over to rates here. So again, this is a nice trade for us this week. So we were long, really the long yield via the TMV, and really nice pattern here. Spike the low, no follow through, and a really nice outside move. Here's the setup right now. You can see the trend lines there. Nice break on the 30 and 10s. But I think potentially, this is just speculation, but I think if you get back above 4% on the 10-year, I think that's where the market starts to get worried. That's where I see a little bit of risk here. And the reason for that is right now, the market's okay because jobs beating says, okay, closer to soft landing than recession, right? We can argue. I'm not arguing about whether that's true or not, but that's the Wall Street thought process. Okay, we get back above that, the market may start worrying about, is the Fed cutting into growth? Look at the 2-year right now. This yellow line is the effective Fed funds. It was 5.3. It's now 4.83. That gets back above 4.1. I don't even know if they could cut 25 basis points, because that would take you down to, like 4.6 or so, 4.55. You'd be really close to that 2-year yield. So that would be an issue that could come up. We have inflation data later this week, PPI, CPI, coming out, I believe, Thursday, Friday. So that's something to keep an eye on. And then we got obviously 5s, 10s, and 30s acting very well. I think the long end remains firm for the most part, even if the Fed keeps that 2-year down. The issuance is not going to stop no matter who's in office. XHB actually had a little bit of finally had some weakness. It still held the 20 MA on the daily Friday, but good volume there on that sell. And again, like looking at the XHB versus SPX, SPX was up big on Friday, and XHB was down 1 1/3. So a little bit of weakness here, back below 120, especially on a weekly close. Could probably take this back down to 110, 111, honestly. Trend would still be up, but home builders surprisingly weak on Friday. So I'm not sure if there's something going on there, but definitely noted. VNQ we talked about with that 618, and it did back off this week. Picture perfect, right? Got up there, hung around, and then it backed off finally. I talked about $94. It got to $94.24. Right into the 50-day moving average. Nice bounce there. If this closes below 94.80 on a weekly, that would be a big negative, though. So just be aware of that. XLF, really strong. So higher lows here, and weekly bull pattern here. There's no problems with this. It got a little overbought for 4 weeks, but the 20 MA, if that catches up to price, it can go higher. So XLF still pretty strong. KRE still inside of this wedge. Beautiful tag of that lower trend line on Thursday. KBE following suit. And broker dealers, of course, they're at new all-time highs. So you gotta love those XBD there. You make a case that kind of into this kind of trend line right there. So maybe that pulls back. next week. We could even do this. So you got kind of like a channel there on XBD. So broker dealer is still strong. Oil was a star this week. I'm really liking the energy sector right here. I think there's like a lot of value in these energy names. I told you guys about Exxon, how cheap it was, and I love the monthly pattern, and it had a new all-time weekly closing high this week. So I talked about that a few months ago, and it is on breakout now. We'll talk about that in a second, but oil, again, lots going on in the Middle East right now. There was headlines about bombings. That's what kind of brought the market down Tuesday. So tensions are rising here, and oil finally on breakout, higher high, higher low, breaking above that trend line. Guess what? Back above all the moving averages now. So oil in way better shape here, and I think dips can be bought now in oil. If we get a dip here, I'm probably buying, and that goes for XLE as well. I like the energy names. Inverse head and shoulder triggered this week. Targets right basically up to the highs. XOP, inverse head and shoulder, triggered. It's into some resistance right now. But again, I think dips can be bought, and the same goes for OIH. Inverse head and shoulder, triggered. Resistance right in this area. This is where it broke down. Went here, we retraced, it broke down there. So there should be some resistance here, but I like the energy stocks right now. Typically in an election year, they do well after, right around the election, with that incumbent in office. I think timing is good for them too. So anyway, CCJ, man, I talked about this W bottom here, and I had no idea it was going to go this high this quickly. Amazing price action. And take a look at remember the head and shoulders I talked about. I said, get out of this if that triggers, and it did. And we went all the way down here to target, and then I said, look for a W bottom, and that's exactly what happened. Unbelievable move, 35 to 52, essentially in what, like a month? So amazing move for CCJ. We'll see if this trend line here gets back tested and that offers some resistance. I think the URNM is into some resistance here as well. Maybe it could get up to 50 in the short term before backing off. And the NJ, the juniors here, back above that white trend line there on the weekly. But again, a little bit of weekly chop here again. So I'd say uranium stocks have a little bit of upside here. Then they're going to run into a little bit of a wall in the short term. But nice price action here off of the lows. Natural gas here on the X contract finally got a pullback day on Friday. Good outside move down. I think this has one more peak in it as we get into November, maybe two. So I do expect it to get into the low to mid threes. It may have a dip in it. It already dipped pretty good on Friday. We wiped out pretty much the last 4 days of trading in one session on Friday. Finally got a dip. But we'll see. I do expect it to get through this 304, and then I could see easily 315, maybe 330, 340 by the end of the year, and then I think it's done for a little bit. Dollar index, again, I've been talking about this. Dollars, don't be short down here, especially going into that jobs number. It's at the lows of the chart. We have a beautiful divergence here. Higher low in the RSI, lower lows there. And look at all the selling, right? Look at all this selling. Very little reward. You're barely able to hold below that low. And that tells you that shorts are crowded. Going into a data release like jobs, any sort of good news is going to cause a squeeze. Dollar ripping higher. I told you 102 and then 102.50. That's where it stopped on Friday. 102.487. So we'll see. It might have more upside. We'll talk about maybe you're in these pivots here. You get the 100 MA, 103.25. 200 MA, 104 up there too. But dollar and dollar yen also ripping higher. I love this type of pattern. Fake breakdown, right back above, back test, and then boom. Gold holding up really well despite the dollar strength. I don't think gold cares right now about yields or the dollar. I watch gold, I watch the dollar, I watch yields all day, every single day. Pretty much all day long. And it's not behaving inverse to the dollar at all. And it's not behaving inverse to yields at all. So that is bull market behavior when it doesn't care about the news, right? It just continues to go up. That's bull market behavior, and we're seeing that textbook here. So gold is still very strong. Up move, little pullback pattern, no problems. I think it's going higher. And silver made a new multi-year high on Friday. It didn't close at the highs, but it got very close. This is a nice bull pattern here as well. It's getting mature now. That's getting ready to go to 35. If we want to look at the miners are a little softer. So a little bit weaker. I'd prefer to see them firm up, but SIL was up on Friday. SILJ flat. Platinum here was weaker on Friday, but still a decent pattern here. It's sloppy, but up move and consolidation. Got to get through these pivots here and through this trend line again. And then palladium, I believe, is getting close to completing a pullback pattern. I'd like to see it get back above 1050 to confirm that, or let me say 1053, which is that red bar right there. But I do like this a lot. And platinum. Copper here. Again, just like everything else, bull flagging right now. So what you want to look for as a bull here is this 20 MA to just catch up to price like that, and then it can go higher. So I don't see any problems here with copper. Looks fine. Last but not least, Bitcoin. So it took a pretty good dive early in the week, and then it started to curl back up. So we'll see if we get a third higher. I got this trend line drawn in here. We could even back off to this trend line. I'm probably a buyer there though. I do like Bitcoin a lot, and I think this pattern here on the weekly and monthly is this is as good as you're going to get. It's very strong. So this is on the cusp of breakout, if you ask me. Maybe it has a couple more weeks. You know, there's the monthly here. 20 MA is starting to catch up, but I think it's getting ready to go. And when I say go, I mean, 90,000. So we'll see if that is true. But right now, I don't see any problems with it. Looks pretty strong. Again, markets, holding up pretty well. Again, I still don't see, I know we have a nice tight pattern here. I just don't see a ton of upside here left at the moment. I think there's better plays than chasing the indices here and tech stocks at the moment. Like I said, I think energy is very intriguing right now. And there's other areas of the market that I think you can find opportunities in. And we have stocks like Meta, new weekly. I mean, I can't chase it at all-time highs here. I just can't do that. But markets are holding up okay. We'll see what we get next week. We have inflation data. Again, watch yields. If that 10-year gets above 4%, we'll see if narratives start to change. Right, the narrative has been disinflation lately. Right, if that starts to creep back up, that narrative can change very fast, and we'll see if the market actually responds to that or not. But right now, again, market is holding up okay, and we'll see what we get going into next week. So anyways, guys, I'm going to wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll see you guys all next week.